Good afternoon and welcome to Midcap Radar, live from the CNBC-TV18 Motilal Oswal studio. I am Vivek Eicher and with me is Mangalam Malu. Good afternoon, Mangalam. It's an action-packed day, earnings season, quite a lot of news flow, and markets are cooling off a little bit from the day's highest point.
Cooling off indeed. What's interesting is, however, that Nifty, while it's meandering around the 23,300 mark, it's the mid-caps which have sharply come off the highs. They were outperforming with a gain of almost 0.5% to almost 0.6%. And now we have that index just about flattening out. What's good is that the Nifty Bank continues to do well, so we'll keep an eye out on that. And we have the advance decline ratio, which also is in favor of advances. Let's get you all the top stories that we're tracking this afternoon for you. Stocks, they trade in a narrow band as recent Trump messaging elevates uncertainty. PSU banks and private banks eke out gains while auto, IT, metals drag. It's the mid-caps that fared better, though currently off highs.
Lupin and Zydus Life under pressure as they lose Mira Bedrock case in a US federal court. Both companies will now have to withdraw the drug from the US market.
A revision in the administered gas allocation to city gas distributors involving a reduction in supply from old fields and some allocation from new blocks is seen driving up costs. Stocks of IGL and MGL slip on the revision.
United Breweries in focus after its parent Heineken NV says that in 2025 so far their organic net revenue in India grew in low teens while beer volumes grow mid-single digits. Add that the growth lagged market as supply in one of the major states was temporarily halted.
Aditya Birla Real Estate gains on the back of a positive fourth quarter and FY25 update coming in from Birla Estates reports highest ever booking value of 8,000 crore rupees across key focus markets.
Well, like we just pointed out, quite a few stocks seeing quite a bit of a sell-off, especially in the last half hour or so. Quite a few power stocks actually that were outperforming in the last couple of trading sessions seen a bit of sell-off. JSW Energy now near the day's lowest point. Zydus Life and Lupin, both of these stocks now at the day's lowest point. But Nigel today is standing at the wall. Nigel, what are the top movers as far as the broader end of the markets are concerned?
Well, that's right. The markets have come off the high point of the day, but a couple of stocks are still doing well. So let's start off with the Rani twins. Rani Bricks as well as Engines, both of them are holding high with gains of around 10 to around 12% in today's trading session. Add to the list a couple of other stocks that are moving on very, very large volumes. So you have Max India that's up close to around 14%. Cupid, well, that one as well is up close to around 14%, while Orient Paper, that's another one that's up close to around 8% as we speak. On hopes of a big bus order for electric buses, well, you have both Electra Greentech as well as JBM Auto. They're up between 5.5% to around 10% and on massive volumes out there. On the flip side, you have a few stocks that are seeing some selling, and they have been underperforming all through the trading session. So Balu Forge is down close to around 10%. Sinline India, well, that's down close to around 5%. And you have India Shelter as well that had a good run, but that's given back some part of that good run that we saw in the last few trading sessions. The stock is down close to around 4.5%. Back to you.
Point, Nigel. Thanks a lot for that. So those are a bunch of stocks which are moving on either side. Currently, we have Chambal Fertilizers, which is at the low point as well. And, Zydus and Lupin are lower on the back of news. Glenmark too has slipped to the low point of trade. We take a short break and come back. On the other side, we get you more of the markets and a lot of individual stocks. We've been talking about the big setback for Lupin and Zydus as they've, lost Mira Bedrock case in the US federal court. That explains why the stocks are lower. What are the details for which we have Vinny joining in? Vinny.
Hi, so afternoon. We have both these stocks that are in focus. Now, just to throw back to what was happening. Previously, US FDA had now cleared this Mira Bedrock case that was going on against the innovator that is Astellas Pharma with Lupin, Zydus as well as Sandoz. Now, obviously, that clearance had come in, so they launched the product. Now, today what we understand is that the US federal court has given the order in favor of the main company, that is the innovator, and Lupin and Zydus have lost the case for this Myometric drug. Now, Myometric is an important drug, generic drug that comes in for Lupin and Zydus. Why is that so? Because the estimated sales of this, according to analysts, was around $35 million. This was quarterly sales. So on a yearly basis, if you look at it, around $100 million that they would be making on this drug. This was for Zydus, while Lupin was estimated around $25 to $30 million per quarter. So important drug update coming in on that front. And that is why today we are seeing a bit of a fall coming in, actually a sharp fall coming in the stock price as well of both these companies after this announcement has come in.
Thank you so much, Vinny, for joining us, giving us the details of what exactly is dragging both Lupin as well as Zydus lower. Well, to discuss more on this, Vishal Manchanda, pharma analyst at Systematic Groups, joins us now. Thank you so much for joining us, Vishal. Vishal, the first question, Mira background, was being looked at as a very significant opportunity for both Zydus as well as Lupin. How big of a setback is this? What are the kind of EPS cuts you will now have to take? And if you could also give us a sense of, what were the sales that the company had seen post the at-risk launch? What is it that they will have to give back to the innovator?
Right. So a very meaningful drug for both Lupin and Zydus. I think this was a larger drug for Zydus than it was for Lupin. I think probably 2 to 3x larger for Zydus than it was for Lupin. I think in terms of earnings impact, it should impact the FY26 earnings, while the impact on FY27 earnings will not be very meaningful, but there will be some impact because of lower cash on the balance sheet. So, as you said, we should expect penalties that Zydus and Lupin might have to pay to the innovator. But before that, probably they'll appeal the court's decision and try to kind of put a case here at a higher court. In case they lose they lose even the higher court, probably I can think of a 1x penalty on whatever they have done in sales. So that's how I look at the situation here. FY27 estimates should not change too much, but we'll see an impact on FY27 a bit.
Okay, analysts said, it was close to $25 to $30 million dollars per quarter in terms of sales coming in for both these companies. How much would you have to revise your earnings and estimates downwards because of this? And is this the final order that has come in, or are there any further legal recourses that the company can take?
There's a recourse. Probably the company can go for a higher court appeal here. So we'll wait and see what the company does. But if they don't, then probably we should hear on the penalties whether they need to pay the penalties or not. Generally, it is 1x of sales is what we have seen in the past. The penalties.
In your scenario analysis, if it is 1x the penalty, then what could the EPS impact be?
So that will be a one-off impact. But I think in terms of the earnings contribution, I think there are two parts of the impact. One is the lost earnings, FY26, the lost earnings on account of this, and the second would be the impact on account of the penalties. So impact on account of the lost earnings for Zydus, it should be around 25-30% of the sales. 25-30% of the EPS, and for Lupin it should be around 10-12% of the EPS. While because of the one-off impact, it will be a higher number, say around 35% of earnings, and for Lupin it should be 15 to 20% of earnings because of the one-off penalty.
Thank you so much, Vishal, for joining us. No wonder then we can see quite a sharp correction on both of the stocks today. Mira background was seen as a significant opportunity. But as we now slip into a short break, here's some good news for our viewers. India's business news leader is now just a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play Store, or just scan the QR code on your screen.
Gensol Engineering shares tank after the market regulator SEBI has passed an interim order against the firm and its promoters over alleged fund diversion and false disclosures as well. To discuss more on this, we are now joined by Shriram Subramaniam, who's the founder and MD of InGovern. We're also joined by Vaibhav Kakkar, who's the senior partner, Saraf and Partners. Thanks a lot, gentlemen, for joining in. We read through the SEBI note, and there have been some glaring misappropriation allegations out there as well. And beyond that as well, if you just look at the way the stock price has moved from over 1,100 rupees down to where it is right now, a near 80-85% decline from the top, there's been a serious amount of wealth destruction as well. Shriram, I wanted your thoughts on what went wrong here, because one of the glaring mistakes that the SEBI points out is that they went to the plant and it appeared that there was no production that was taking place. In an era where there is so much, research that is undertaken by a lot of the research firms, etc., along with all the investment bankers as well, who would look at all of this, do you think this did not pass their due diligence? What exactly happened here?
It's a matter of timing. I would think from a perspective of investigation, etc. I don't think any analyst of such a small cap is going and visiting the plant, etc. Today, of course, the market cap has been pumped up by social media and influencers. And explicitly, this is a case of blatant fraud and forgery. And SEBI, in fact, doesn't touch upon this entire topic that you aver to, which is pumping and dumping the stock, where social media influencers are used and explicitly hired by the company to put out order book status, to put out manufacturing numbers which are out of the blue, to put out data and numbers and sort of influencers pumping up the stock and talking up the stock. And to the extent that the market cap is totally unsubstantiated, there are no numbers to back it. And eventually the promoter is selling the stock. And based on that, either the promoter is leveraging by pledging the stock or selling it themselves, which shows in the SEBI order that they have bought and sold the Gensol shares.
Right. Completely take that point. Let's also bring Vaibhav into this particular discussion. Vaibhav, where does the blame lie? Number one, of course, you have seen that the promoters, it's now quite clear that there has been significant wrongdoings on that front. We've also seen multiple quarterly updates come in where there's also been auditors who've audited the financials. And it's quite surprising that there haven't been any clear red flags that have been raised. Does that also concern you? And are you also worried, or are you slightly surprised that it has taken SEBI so much time to go ahead and come out with a detailed report as far as the forensic audit is concerned?
First of all, good afternoon. Thank you for having me on the show. Well, you're absolutely right. Invariably, if you look at instances of the past as well of fraudulent transactions undertaken by promoters to benefit them of large listed companies, whether it is the case of CG Power, whether it was the case of United Spirits, whether it was the case of Satyam, or for that matter, Fortis Healthcare, invariably you would see that it is not just the promoters who have participated in that fraudulent transactions. There are a bunch of stakeholders as required by law that are meant to put systemic checks and balances, namely the auditor, the independent directors, the internal audit requirements, and various disclosures that they're required to make from time to time. It appears that in this particular case as well, a number of questionable circuitous transactions were undertaken. Also, basis the SEBI order, it appears that it was actually the credit rating agency. So for once, kudos to them to have called it out very clearly. It is the credit rating agencies that brought it to the attention of the market when they felt that even some of the reports with regard to repayment of debt were falsified by the company. And so clearly it points to the fact that, and some of the other practices where manufacturing was not taking place, monies were moved to benefit the promoter to buy expensive real estate for their own benefit, money being circuitously used to purchase its own shares, clear case of alleged fraudulent unfair trade practice and insider trading, as well as complete ill practices insofar as falsification of accounts, as well as financial statements is concerned. I think all of this systemically points out to the fact that obviously the promoters have not done what they were supposed to do. But besides that, the key managerial personnel, which is namely the chief financial officer, the auditors, all of their roles would need to be thoroughly assessed and investigated. And one hopes that by the time SEBI completes the forensic audit, there's greater clarity on where all and who all have been the players who have partaked in this sort of scheme, and then they're eventually brought to the book. But I do also want to make one very quick point, and maybe I think that could be a segue to another question that you may have, which is that what happens to the company? SEBI, in its exercise of powers under the SEBI Act, has issued certain directions which has barred them from being on the board of this company, dealing in securities of the company, as well as dealing in securities in the capital market. But what happens to the company? And I think effective revival plans, the independent directors would need to step up to revive the company, because there's clear bad faith right now, which is also punishing the investors and the public shareholders who may have stocks in the company.
Which exactly was, one of the questions that we had for InGovern. How do you protect shareholders from this, and what happens to the minority shareholders who have lost nearly 80-85% from the top?
SEBI has the powers, I would think, to supersede the board, whether it be the current independent directors or new set of directors who can come in and step in and take the company forward. After all, one would like to think that because we see the blue smart cars on the road, at least there is some physical assets. Two is the EPC business itself. There is some merit to the EPC business, hopefully. And so whatever it is, there is some operating business. There are some employees that has to be safeguarded and ring-fenced from all these. And obviously the lenders, which is the IRDA and PFC, are going to sort of have their claim to whatever extent they can recover, because they may have already sold some of the shares which are pledged, etc. There is, I would think, more than 1,200 or 1,600 crores of debt on the corporate book itself. So to that extent, it's not a small number, given that the market cap is now less than 400 crores and headed southward.
Vaibhav, that's a very interesting point that Shriram has just put out. There are a few operational assets, as you can see. There are cars running on the road. Now, when it comes to retrieval of number one, you have the lenders. Number two, you have the equity shareholders, and in the pecking order, the equity shareholders actually are at the last. So, does an equity shareholder, number one, have any recourse to legal action in this particular case? Number two, what is it that the lenders can hope to retrieve? And number three, you've actually seen a case where there has been purchase of a property in the promoter's own name. So, will those assets also be attached, and can there be some recovery on that front?
Very valid question. Let me answer it in this way. The law books have sufficient number of provisions that empower the shareholders to take legal action. In fact, to my mind, this is a fit case for a class action under the Indian company law. I happen to be championing the cause of a shareholder in a large listed company, which is Jindal Polyfilm, in initiating the first class action in India. I would imagine that similar such framework may come into play in times to come. Under the class action framework, the promoters and the directors of the company who are responsible and liable for fraudulent transactions can be made personally liable to compensate the company and its shareholders. So to my mind, apart from whatever punitive action that SEBI might take from a regulatory standpoint, shareholders, equity shareholders, would also have the ability to initiate direct proceedings to be able to recover for the loss. Of course, it's easier said than done. The legal processes in tribunals and in courts can sometimes take a little longer than one would expect. But I do also want to make one quick point. See, the challenge would be that, promoters' holding has now come down to 35%. And almost entire part of their shareholding seems to be pledged with banks and financial institutions. Typically, with the SEBI order of the nature that it has been issued yesterday, one would imagine that lenders will now very quickly call out events of default under their financing documents. And the promoters' holding in no time can actually come down to a very suboptimal percentage, close to 1%. Something similar had happened with Singh brothers when they lost control of Fortis Healthcare as well. If you would remember, when the banks sold the shares, the pledged shares in the market, and promoters' holding went down to less than 1%. In a
Right.
scenario like that, as Mr. Subramaniam was mentioning, I think it's absolutely critical that SEBI collaborates with the government to come up with some sort of a mechanism to revive the company, getting in institutional shareholders. Because if you will let this company go down the IBC path, by the time there'll be recovery, you can actually have a Jet Airways where there's no.
We take that point. We take that point entirely. Thank you so much, gentlemen, for joining in and giving us your insights out here. Is the start of a conversation. Obviously, the ultimate goal is improvement of shareholders and preventing them from any such fraudulent activities that may take place in the near future as well. Shriram as well as Vaibhav, thank you so much for joining in on for this conversation on our channel. With that, we have run out of time on this edition of Midcap Radar. 2 indices in the green, 2 indices in the red. Atop your screen, Vivek and I take your leave.